Guys, what's going on? My name is Ryan. I trade ETFs, and I like to make videos of the technical analysis that I'm seeing in the charts. So we've got XBI, Biotech here today, so let's get started. Here on the daily chart, I see daily charts as a longer term chart. I then go to the 2 hour and 1 hour to mark my medium term charts, and I finally go into the minutes to mark my shorter term charts. And so here's the larger term picture of what's going on. And we can see that this marks out the last basically 2 years of price action. We see that we have this large fall all the way into 2016, and we come into this megaphone pattern. We set our low here, and we come up and do A, B, C, D, E, and this E here marks the end of the pattern, and we see that we fall all the way back down to it, and we've been struggling to reach this continuation of this pattern. So I think that this is the completion of the megaphone pattern, and anything after this point, we're going to be looking at new patterns developing here in the price action. I've marked here in this dark black lines here some hard support and hard resistance levels that I see in a longer term perspective, and I'm going to leave these up throughout all of my time frames. Another thing that I'd like to note is some slight divergences that I'm seeing here in price. Now this is a longer term divergence here on the daily chart that spans a little bit over a month, and this has got me first of all a little bit concerned about the future price action about biotech sector, simply because this divergence hasn't played out yet. Now we'll see that divergences don't have to play out right away. They are just simply divergences where the volume, the indicators, certain things like that are not responding to the price action, and this can be a divergence for a very long time before it actually starts to set in, but it is something to keep in mind here. I see a second divergence here with the slow stochastic slowly creeping up here and making higher highs while price here was making lower lows. And this is a shorter term. This is probably a 2-week divergence here, and it may be signaling a longer term bullish run, or this pop that we have down here from the 66.75 all the way to the 72.50 range. That might be the bullish divergence, and the bullish divergence might be over. However, I am still waiting on this longer term divergence to take place. One other thing that I'd like to note here on the chart is if this channel is valid, which thus far it seems to be working out fairly well here with the price, it's nice to see that when price, you can basically draw a line from where it touches the bottom here over to the top, to the bottom, to the top. And we're at the top now here, and what I'd like to see, or expect to see, again, if this channel is valid, is for price to come and touch the bottom again and rise up higher. So right off the bat, I would like to point out that we are in probably the upper third range of this channel. If you see this dashed line all the way through here in the chart, we're above that, and we are significantly above that. And what I'm trying to say by this is that the RR, the risk to reward, is favoring the bears at this point. There is less upside for us to go. For example, if we're at 71.35, I see our upside being, about $75, whereas our downside might be, $63.50. So just from a risk reward standpoint, that's what I'm seeing in the charts. However, I have to admit that biotech has been the most challenging sector this week to analyze, simply because there are several factors that are negating each other. There are conflicting patterns that I see in divergences. For example, we've got a negative divergence right here, which leads into a cup and handle pattern right here that I think we might have just broken out of. Now, your cup and handle pattern is a very bullish pattern, and being that this is on the daily scale, that would probably give us strength to break up above this hard resistance zone that I have drawn here. And if we get up above this point, that is very positive outlook for biotech as a sector. So getting into a smaller time frame, let's go from the daily to the 2 hour. On the 2 hour chart, I had what I thought was a wedge over here, which it very well might still have been. My megaphone originally was on a longer term time frame than this 2 hour, but I didn't want to delete this simply because it's a good example of what I like to see in a rising wedge pattern. I like to see our high, our low, our C, and then for D, I like to see it actually break out below the pattern, and then E is touching the apex up here. And we see that once the apex hit from this ascending triangle, we fell significantly down to the bottom of this range. And then we immediately popped back up, and we set in what I'm starting to see right here again is this A, B, C, D. And what I could see playing out is us rising up to this top, to the top of this E here again, and setting our apex before we fall back down lower. However, we may not touch the apex here at E because I'm starting to see several divergences take place. For example, here's one where our RSI peaks out over this red line, and on the next high, we don't peak out here. This is a negative divergence here, yet price stays flat, if not goes even higher. And this is coupled with a slow stochastic divergence that I see here, where we make this high right here, followed by a lower high as price makes a high and a higher high. So there are two divergences here on the RSI as well as the slow stochastic that are making my sentiment towards shorter term timeframes of biotech sector slightly more negative than usual. Another interesting thing to note is that we have what could be considered, a triple top and maybe a quadruple top here, hitting 1, 2, 3, 4 times, marking this as extremely significant resistance right here. And we can see that we were actually rejected pretty hard off of this resistance level right here. And it's kind of the same psychology as a triple bottom in that people like to short here at a triple top, as they miss out on the first one, they see the second one, and we drop right here. And once we get back up to the same level and we reject off of it again, you have confirmation 2 previous times that price dropped significantly. Why not short right here at the top again and capitalize on the historical price action at these levels? So that's kind of the 2-hour time frame that's going on right here. On the 1 hour, again, we can just see that we were rejected here at this hard resistance. On the 30-minute time frame, I just thought it was interesting because I saw a diamond bottom here, and price responded very well to this. Diamond bottoms are marked by 9 touches, and it's kind of hard to see here, but we had 1, 2, call it 3, 4, 5, 6, 7. I don't know, it's hard to tell here on the 30-minute chart. I have more clear diamond bottoms over in natural gas and in US oil. But again, here on the 30-minute chart, we can just see the same divergences play out here, where our RSI is at an all-time high and we make a lower high as price makes a high and a higher high. This was the same divergence I saw from the 2-hour chart, just shown even closer. Another interesting thing is the increased bear volume that we see coming in as we get rejected off of this, and the bears get confirmation of this, they pile on here. So on the 15-minute chart, I saw a nice little Elliott wave as well as an ascending triangle, and I did a measured move in my last video of this ascending triangle, and price didn't get all the way up to the top of it. I think it missed by about 20 cents or so, but it gave me a pretty good range to work within here. The measured move is from the top where it hits this resistance level down to the support level, and just cloned this, and then you bring it to the point of breakout, and you wait until price hits the top of this, and that's called your measured move. We can see that this is a bullish ascending triangle because price rises into the pattern, so it's expected that price is going to be bullish as we go out of the pattern. An ascending triangle is kind of a continuation. So before we get into the ascending triangle, actually the Elliott wave is more easy to spot on shorter time frames, so we'll do that in a minute here. But we can see that we set here our resistance, we come down A, B, C, D, E, and then we kind of have a bust. This is a busted symmetrical triangle, and we see that we come back up and actually break out, retest, and right at our apex point about, we start to shoot up higher. So this is a good example of what a busted chart looks like. And I think it was a busted chart just because we were, probably 50%, 60% the way through this ascending triangle, and price needed time to reach the apex over here before launching up. So we bided our time by dropping below a little bit and coming up, flagging out, and then rising higher as we got closer to this apex here. So over on the 5-minute chart, the 1, 2, 3, 4, 5 Elliott wave is a little bit easier to see. We have this 1, 2, we have a long 3 wave, then we come into our pattern, set our bottom 4, and then this is the end of our 5th Elliott wave. So concluding our Elliott wave would give us more vindication that we are headed lower, just because the completion of an Elliott wave is usually followed by some sort of a retracement. So if we look at the chart here, one thing that we can see is I marked this here as our must-hold level. This is a must-hold level because basically the only consolidation that we made within the last 2 weeks has been within this range right here as we were going into this pattern. And so if we break below this, there's little to no support on our way back down to the lows as we rose up into this. And so this is a must-hold level, the $70 range here for bulls here in biotech. And right now I do see, a diamond top and a pennant continuation pattern. And so this gives me reason to believe that we are going to see the same drop going into the pattern, and we're going to see that same drop coming out of the pattern. And so if my ultimate destination for a bearish move in biotech for the very short term is going to be here at the $70 range. And if we hold that, I can see us breaking out. And if we lose this, I can see us breaking down. On the 1 minute, I just think it's interesting to point out what I mean by a diamond top, diamond bottom. So I talked earlier about 9 touches, and I think we have 9 touches here. We come in and we set our 1, 2, 3, 4, 5, 6, 7, 8, 9, and then we break out of the channel or out of the pattern and fall back down. And as far as this pennant goes, we are falling down into the pattern, and so it's a bearish continuation pennant. We're falling down into the pattern. We set in our first support level, and this marks our resistance level. So this is A, B. I have reason to believe we're going to go up to C, and then D and E would be a perfect symmetrical triangle. However, we might just get rejected at C and break down further. But for the short term, I am bearish biotech. For the medium term, I am also bearish biotech. And for the long term, I guess I'd have to say that I'm bullish biotech because of this cup and handle pattern. It's a very complicated chart right here going on. It's a very important point in time for biotech. And so I'm interested in seeing what plays out in the following weeks. All right, good luck in trading. And that was my analysis for biotech.